Hello traders, welcome back to the Easy Forex Strategy. In this video, I will teach you one of the easiest trading strategies that works in Forex, indices, and cryptocurrency. We'll utilize higher time frames for analysis and lower time frames for entries to reduce risk. In this video, you will learn everything about time frames. Even if you are a beginner, this will benefit you a lot in reducing risks in all markets. In the next chapter, I will show you the two patterns that you need to focus on in the higher time frame, including the reversal pattern and continuation pattern. You will also learn all the rules to follow when using this trading strategy. Make sure to watch the full video because we will also include an example on a real chart, allowing you to tackle the market in all sorts of different conditions. We will also demonstrate the backtesting software that we use to test all of our trading strategies. As a bonus, this video includes a free PDF, and you don't receive just one PDF, you will also receive a previous ebook. Check the link in the description below. If this is something that you are interested in, please make sure that you subscribe to our channel so that you don't miss our upcoming videos. Also, give this video a like. Trading on the higher time frames can be challenging for new traders. They often face confusion when transitioning to lower time frames after analyzing the higher ones, as they may not know which lower time frame to choose. Here, we cover all time frames. The higher time frame is where we will conduct all of our analyses. After conducting analyses on the higher time frame, we will move to the lower time frame. For example, if our analysis is on the daily time frame, our lower time frame could be the 1 hour or 30 minutes. This lower time frame is used for entry points. By transitioning to the lower time frame, we aim to minimize risks. Therefore, this lower time frame can also be utilized for making entries. But we are not done yet. Some traders prefer to go even lower than the initial lower time frame. In this time frame, the risk is exceptionally small, but the potential profit is huge. This means you can risk $20 to aim for a potential profit of $500. The risk-to-reward ratio is incredible in this time frame. However, it's important to conduct backtesting as it may not be easy at first. Putting in the effort to improve your skills is crucial so that navigating the market becomes easier over time. For instance, if we conduct analyses on the monthly time frame and use the daily time frame for entry, we can further reduce the risk by moving even lower. It's uncommon to see a large number of traders entering the market on the daily time frame. We can continue to the 1 hour time frame to decrease the risk even more. It's important to note that entering the market on the 1 hour time frame will be based on the monthly time frame analyses, which forces you to hold the trade for more than 2 months. Therefore, don't be alarmed by weekly pullbacks, as your take profit will remain intact. In this section of the video, we will cover the structure and rules from the higher time frame to the lower time frames. For a reversal pattern, it's crucial to ensure that there is a clear change of character in the higher time frame. In this example, we can observe that the last higher low has been broken. The supply zone should be clear to your naked eye. Before moving to the lower time frame, ensure that the price has already touched the supply zone or is very close to touching the supply zone. A fair value gap is important because we must ensure that the price closes it before moving lower. The take profit level will be the swing low that broke the structure. Even when we move to the lower time frame, this low will serve as our take profit. When moving to the lower time frame for entries, we will try by all means to identify the same structure, but this time for making entries. As you can see, price has touched the higher time frame supply zone in this lower time frame. Also, ensure that in the lower time frame there is a supply zone, because this is where we will be looking to make our entry. A break of market structure is also crucial to be observed in this lower time frame, as it provides a sign that the market might have the potential to move lower. After conducting the analyses in the higher time frame, the take profit level will already be marked in the lower time frame. Then, all you have to do is place your sell limit order on the supply zone. However, as you already know from us, we prefer to confirm our entries. So, we will wait for the market to close with a bearish candlestick. This helps us avoid being stopped out unnecessarily. While many traders aspire to be sniper traders, our trading strategy allows for precise entries even when using a confirmation candlestick. Now, all we have to do is wait for the market to play out. There are only 3 ways your trade will be closed. 1. Close with a profit. 2. Close with break-even. Or 3. close by hitting your stop loss. However, if you don't use a stop loss, then I suppose that's a story for another day. As traders, we can't focus on trading reversals only. In this section, I will show you a pattern that occurs 90% of the time. This is a continuation pattern, and in the lower time frame, it will appear as a reversal pattern. In a bullish market, you have to ensure that there is a clear demand zone, and this area will be used as an entry point in the lower time frame. As you know, the market moves in waves. In a bullish trend, make sure that price has traded above the previous higher high. This will give us a signal that we need to trade only the pullbacks. Also, ensure that there is a fair value gap above the demand zone, because price is likely to sweep some liquidity before it can close the fair value gap. Because price is bullish, our take profit level will be at the previous swing higher high, or an internal fair value gap near the previous swing high. However, always keep in mind that price can be unpredictable, can sometimes behave unexpectedly. Moving on to the lower time frame, you will notice that the price has touched the higher time frame demand zone. Now, all we have to do is find all the rules to fulfill the entry model. Make sure that there is a clear break of market structure in the lower time frame. After the price has touched the higher time frame demand zone, you also have to find a clear, lower time frame demand zone. If you are unable to draw supply and demand zones, please comment below, and I will make a dedicated video about it. Make sure there is also a fair value gap above the lower time frame demand zone. Don't try to enter the market too early because price might seek additional liquidity, especially if there is a fair value gap below an internal low. Take profit level will be the previous swing higher high from the higher time frame. Then, all you have to do is use your own entry strategy to enter the market and set a proper stop loss. Ensure that you always consider the added spread size on the stop loss to avoid unnecessary losses. In this first example, we can clearly see that the market is bullish. So, we will follow all the rules and observe if price action will allow us to move to the lower time frame before deciding to enter the market. In this scenario, we will be looking to enter the market with a continuation pattern on the higher time frame. Because price is bullish, we will only see new higher highs or breaks of structures. Therefore, we will only enter the market on the higher low, as this will be our retracement area. In the next step, we will identify our demand zone. Also, make sure that you draw the demand zone correctly on the candlestick. In this case, we have used the last bearish candlestick before a series of bullish candlesticks that breaks the bearish candle's high. This is also called a break of structure, and if you zoom in on the lower time frames, this will become very clear. And before we move on to the lower time frame, make sure that the price has touched the demand zone. Then, our prediction will look something like this. Our take profit level will be at the previous swing higher high. And traders, don't forget that you also need to identify a fair value gap. I know we didn't explain what a fair value gap is, but in simple terms, is just a space between the wicks of 3 candlesticks that don't overlap. In the lower time frame, it might appear that the market is bearish. However, since we know that we are looking for the market to be bullish, we will focus on that perspective. Another thing to note is that you have to make sure that in the lower time frame price has touched the higher time frame demand zone. You can also mark up your swings so that your analyses can be clear to find the reversal or a break of structure. We can clearly see that the market made a change of character. This is a sign that the market might reverse to the upside. We can notice that right now we have a new higher high, and there is no sign of new lower lows. This is also a signal that we might be in the beginning of a new trend. And there is also a valid lower time frame demand zone. But we are not done yet. We have to also find a fair value gap above the demand zone. Take profit level will be at the previous swing higher high, from the higher time frame. Now, for entry, what we can do is wait for the price to touch the lower time frame demand zone and close with a bullish candlestick. Then, we can enter the market with calculated risk. In the market, you have to be patient to see results in the long run. As you can see, that our trade hit our take profit level. And traders, remember, all strategies have to be back-tested over a period of 5 years. And there is a better platforms available to assist with that. In our back testing, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below. Now, let's do the same thing, but on the reversal pattern, on the higher time frame. We will also follow the same rules that we used in the previous example. As you can see right now, we are still in a bearish trend. We identify a bearish trend when the market breaks the previous lower low, which is also a break of structure. We can also notice a change of character, meaning the price traded above the previous lower high. As you can see, the price is not that clear, but we will notice it in the lower time frame. Before we move on to the lower time frame, we have to identify the higher time frame demand zone. And you can also see that we used the last bearish candlestick before a series of bullish candlestick. Another thing to note is that we have also seen that the price has created a fair value gap. And lastly, our take profit level will be on the previous high, that high that created the change of character. And then lastly, before we move on to the lower time frame, we have to make sure that price has already touched the higher time frame demand zone. Our overall prediction will look something like this. Because we are still in a reversal pattern, we have to make sure that we always secure our profits and hold other trade for the rest of the trend. Now moving on to the lower time frame. We will follow the same rules over and over again, because this is what we call following trading plan. After making the analyses in the higher time frame. When moving on to the lower time frame, you will always see the same lines and zones. But this time, we will be trying to find the same zone in the lower time frame. Now we can also notice a change of character here. We can also notice a new higher high. So that means we will be looking to enter the market on the retracement in this lower time frame. We can also spot a demand zone after price has touched the demand zone from the higher time frame. A fair value gap above the lower time frame demand zone is very important. Like as we said in the beginning of the video, that price might take some liquidity resting below the previous internal swing lows. A confirmation candle is a candlestick that confirms price after touching the zone that price is likely to move to the anticipated direction of the market. And then lastly, all you have to do is to enter the market and wait for the market to play out as intended. As you can see, price played out in our favor. So if you have enjoyed this video so far, please don't forget to join our free Discord server. The link will be in the description below. So guys, in the making of this video, I used only few example. If you want to understand this clearly, you will only find it out in our private Discord server. The only way you can contact me is via email, or in the Discord by only texting the admin. So traders, I guess, I will see you on the next video. Have a lovely trading week.